Welcome back to our YouTube channel where your request shapes our content. We value your inputs and that's why we have decided to base our video topics on the request we received from you, our fantastic viewers. Here's how it works. If you have a specific topic in mind that you would like us to explore, all you have to do is leave it as a comment on any of our videos. In today's video, we are diving deep into the world of trading and exploring a powerful technique known as top-down analysis. Whether you're a seasoned trader or just starting out, this comprehensive approach will help you make more informed trading decisions. So let's get started. Myself, Srijit Kakkar. Before we move ahead, let's get done with some basic formalities. Please ensure you go through the disclosure, which talks about the representation, risk disclosure, risk control in the market, and also about the copyrights. Before we dive deep into the practical aspects, let's understand what top-down analysis is all about. At its core, top-down analysis is an approach that involves assessing the big picture of the financial markets before focusing on individual trades. It helps you align your trading decisions with the broad market trends, improving your probability of success. To perform top-down analysis effectively, you need to examine the market from three levels: macro, sector, and individual stocks. Let's break down each level to understand their significance. Macro analysis involves evaluating the overall economic conditions, geopolitical factors, and monetary policies that influence the financial market. By analyzing indicators like GDP, inflation rates, interest rates, and central bank decisions, you can gain insight into the broader market direction. Once you have a grasp of the macro environment, it's time to zoom in and analyze different sectors of the economy. Sectors can include technology, healthcare, energy, finance, and more. By studying sector-specific trends, news, and performance indicators, you can identify strong sectors to focus on and weak sectors to avoid. Finally, after assessing the macro environment and sector performance, it's time to analyze individual stocks. This involves evaluating company fundamentals, financial statements, earning reports, and other relevant information that can impact the stock price. By selecting stock from strong sectors that align with the overall market trends, you increase your chances of success. Let's see this with an example, how we can practically apply this to identify stocks. To identify stocks based on top-down analysis, what you'll do is you will open NSE website, and after coming to the NSE website, you will click on the market data option. And once you click on the market data tab, you will get this drop-down menu where you can see the next option is indices. So you need to click on indices, and once you click on indices, so let's just wait for a few seconds because it is downloading the data. So now you have the broad market data, so you can see broad market indices, and just below that you have your sectors, and then below that you have your strategy indices. So you have a lot of information that is available to you. So what we will do is we will download this information as a CSV. So just give me a few seconds. Let me download this So after downloading this information, we will open this CSV file, and here you can see we have the CSV file. Now, since we are only interested in the sectors, so what we can do is we can remove everything else. I don't want all these indices, so I'll remove it. And then we have our sectors, which is still oil and gas, and then I'll also remove the rest of them, right? So once you have the data that is more relevant to you, which is your Nifty 50, which is the Nifty index, and your sectors, what you can do now is, as an example, if you are a trader who is planning trades for short term, you can use the 30 days percentage, but if you're looking at long term investment, then looking at a bigger picture would be much more appropriate. So that is where you can go for the 365 days percentage. So what I'll do is I'll click on this, right? I'll select this data, and then I can go to insert and put it as a chart. And at the bottom you can see we have numberings 1 2 3 4 5 6. So we don't know what these numbers are. So the easiest way can be that you will click on this, you will say select data, and we'll edit this, and now we'll select from Nifty 50 to our sectors, so that at the bottom we have the name of the sectors. So now can you see visually it becomes very easy for us to understand how Nifty has performed in the last 365 days, and compared to Nifty how the other sectors have been performing. So you can see just as a glance I know that the sector which has been performing the best has been the Nifty PSU banks, and the second best has been metals. If you talk about the third best is Nifty private banks, and then you have your realty. So let's assume that based on the macro factors you feel that realty is the sector which can next be benefited. So now what I want to do is probably I want to invest in the realty sector. So what I would like to do is I would like to see which stocks are in the realty sectors and which stocks are performing really well. So now once I have shortlisted my sector, the next thing I can do is I can click on that particular sector here. Like in this case, let's assume I opted that realty would be the sector where I would like to invest based on the macro factors. So I can click on Nifty Realty, and once you click on it, you'll get all the stocks which are within that particular sector. And here also I can click on download CSV, and once I get that CSV file I can open the CSV file, and just like we had the information before, we have the same information available to us now, and we can make it visually much more easier for us by selecting the percentage. I'll click on insert, change this to a chart, and similarly I'll click on this and I'll select data, and I'll edit this to the names. So now you can see I have my realty sector chart available to me, and now I know that in the realty sector has gone up around close to 30%, but the one which has performed the best is DLF. So you can see here it has moved around 28.2, but DLF in the last 365 days has moved around 47.34. So now I know that if I want to go for some stocks, I can probably look at these stocks which are performing well, like you have your DLF, you have your Prestige, you have Oberoi Realty, or maybe I can look for at Godrej Properties. But if I am looking for Lodha or Shobha, these are not the stocks which have been performing with the realty sector. So these are the ones which I would like to avoid, and probably if I have some opportunities based on my trade plan on any of these stocks, they can be better opportunities for me to participate. So in this example I used a 365-day percentage, which can be much more useful if you are into long-term investing. Now if you are somebody who is looking into short-term trades like swing trades, then I will say that looking at 30-day percentage might be more relevant to you. Now that we understand the three levels of analysis, let's discuss the benefits of incorporating top-down analysis into your trading strategy. Top-down analysis helps you stay informed about the overall market condition, reducing the risk of being caught off guard by sudden market shifts. This knowledge allows you to make timely adjustment to your trading approach. By aligning your trades with the broader market trends and selecting stocks from strong sectors, you increase the probability of your trades moving in the desired direction. This improves your trade selection process and boosts the potential profitability of your trades. With top-down analysis, you can identify sectors or stocks that may carry higher risk. By avoiding or minimizing exposure to weak sectors or stocks, you can protect your trading capital and manage risk more effectively. To wrap up, let's go through some practical tips to help you implement top-down analysis effectively. Analyze the market using multiple time frames to gain a comprehensive understanding of the trends. This helps you identify short-term, intermediate, and long-term market dynamics. Keep a close eye on financial news, economic reports, and company-specific updates. This information will aid you in making informed trading decisions based on the most recent developments. Combine top-down analysis with technical analysis tools like chart, indicators, and patterns to validate your trade ideas and improve your entry and exit points. If you found this video helpful, don't forget to like and subscribe to our channel for more trading tips and strategies. As always, remember to conduct thorough research and practice proper risk management in your trading journey. Thanks for watching. Until next time, happy trading.